Morning everybody, Mike Niemiec here with some early morning grain and oilseed comments for Friday, December 21st. Well, after the onslaught of prices midweek, we have a little bit of a recovery in the overnight session as we close down the week. Wheat and corn are up around 3 to 4 cents, beans up around a dime, meal market up around $2, and the soybean oil market up around 60 points. The break in prices overnight did bring back a little bit of tender activity. We saw where Taiwan was a buyer of U.S. wheat. South Korea wound up buying some optional origin corn, but what was nice about this is that they now included the U.S. back into the offerings after once saying that their prices were too high. However, South Korea did pass on some soy meal. The break in prices also had some other advantages. For the wheat, we are now somewhat of the cheapest wheat prices in the international export arena, so we'll see if we can't garner any business in that department. There's also talk about Brazil also maybe looking for some hard red U.S. wheat supplies. The break in the corn prices has now narrowed the difference between us and South America as far as corn prices go. They were at one time $30 a ton cheaper than us. That narrowed up to around a dime. And we were also getting a little bit concerned about the basis levels for beans starting to put a little bit of a dent in domestic crushing margins. Well, with the bean basis break yesterday with the Chinese canceling beans, could give some recovery to the domestic crushing market and give a little bit of support there. So we are still kind of running on the fumes of a little bit of pressure from yesterday as far as the cancellation of beans by China and the small corn sales. But like I say, the break in prices may enhance that. The market yesterday also running on the liquidation as we wind down the year. Open interest had been on a rally in beans and meal, and both of those took big hits yesterday. Today is option expiration for the January contract. We've been swinging between the $15 and $14 strike price for the beans throughout the week. We'll see how that winds up settling down. South America is still okay as far as their weather situation go, although the trade is kind of toning down the corn and bean production numbers in Argentina, while looking at a little bit bigger number for beans in Brazil. So all in all, it's been a down week. We did put in some positives as far as getting more competitive around the world. Obviously that'll be the big crux as far as trying to keep a rebound in the market going, of which we have started here this morning. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.